Good morning, ladies and gentlemen. This is Options University. Welcome to Market Forecast, brought to you by Butch Shorrock. It's Monday, November 25th, 2013. With that thought, access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. As always, do not trade with money you cannot afford to lose. Looking at the indexes for the last week, we saw we had our turnaround and started headed up and continued our overall upward trend. Looking at the Dow, NASDAQ, S&P 500, Russell 2000, as we go down the list, we see nothing but positive numbers from 103 points added to the Dow this week, and all the way down to a little under 6 points for the NASDAQ. Looking at percentage changes, which of course is what all traders are interested. What's your percentage change? What's your percentage rate of return? We see that the percentage rate of return out of the Dow for the last week is up 0.6%. NASDAQ up 0.1%. S&P up 0.4%. Russell 2000 up almost 1% at 0.8. And we see year-to-date lofty numbers coming in at 22.6 for the Dow, over 30% at 32.2 for the NASDAQ. S&P up there well above that 25% mark at 26.5, and the Russell 2000 up 32%, 0.4% for the year. The leader as far as what's taking place in the current market. Looking at our economic announcements for the week, we got pending home sales and Dallas Fed coming out on Monday today, and we see that that's taking place after 10 o'clock. And we see, looking at Tuesday, we have housing starts taking place in the morning at 8:30. We've got house price index coming out at 9 o'clock. So we see we have housing numbers coming out this week, with the HK Schiller coming out at 9. All that before the market, and then after the market opens at 10 o'clock, there where we have many important announcements. We got the most important one of the day, the consumer confidence. Then on Wednesday, we have one of those unique weeks where we see jobless claims coming out at 8:30 rather than on Thursday because of the Thanksgiving holiday. Durable goods orders will be coming out at the same time. And we see that at 9:45, we have the Chicago PMI, certainly a market mover. And then just before 10 o'clock, we have consumer sentiment, followed by economic leading indicators at 10 o'clock. So Wednesday's loaded as far as pre-holiday news, as we see important things being announced. And then, of course, we have our holiday taking place on Thanksgiving, where all markets are closed, but we all have plenty to be thankful for. Friday, November 29th, very little taking place as far as economic announcements, as we have a trade-shortened day due to the holidays. Now, let's take a look and see what the markets did during this previous week. Looking at the SPX, we see that our trend continues. We are at all new time highs on the S&P and closed above that 1800 number, 1804.76 on Friday, and we are certainly up in blue sky. How are things doing up here? How are our stocks doing? What kind of impetus is taking place with our stocks? Are they getting tired? These questions will be answered for you gold members when we take a look at those charts of special stocks that we watch. So, what is our overall trend? We continue. It is up. And that old rule, do not fight the Fed, still holds. We pulled back to that support level that we talked about last week at 1775 and got our bounce up and did our short-term reversal and changed our short-term momentum to the up level. All right, taking a look at the last week, we saw that Monday and Tuesday were down, and we were in a down cycle in our upward trend. And then we see that it turned around, came down almost to that 1775, turned around, got our buy signal on Thursday with a higher high and a higher low, and then got all blue sky taking place on Friday as that bullish day carried well into the close and worked out beautifully, as the SPX is now in blue sky, closing above 1800 for the first time in history. All new territory for SPX, thanks to the Fed. All right, let's take a look at the SPX, and we see, wow, what a year it's been. Here we are back at January, and we're back there around 1400. So we clear 1400 in January. We clear 1500 in February. We clear 1600 there we are, in June. and then we just keep right on going, keep moving on up, and we see that we've actually got ourselves to the point where we clear 1800. So we go from 1400 to 1800 in the SPX. If we look at the Dow, what kind of a look do we have in that? Well, we certainly have had a beautiful uptrend looking at the last 3 months, but what happened to the Dow during the last year? We cleared 14,000, we cleared 15,000, we had all new highs, clearing 16,000 as the uptrend continues in the Dow Jones Industrial, showing us what an uptrending market can actually look like. Looking at the NASDAQ, we see that we're up around 3,900. Will we hit that 4,000? Very likely we will as we're coming into December. December is one of the stronger months that we have in the S&P and the NASDAQ and the Dow in our indexes as the buying frenzy continues, all supported by that surplus of cash that's available and the support that they're getting from government. So the market likes it and will continue to like it until the Fed decides it's going to go the other way. And that's exactly what's going to happen. The Fed will decide which way the market's going to go. NASDAQ, 39.91, headed for that 4,000 number. Very likely to hit it this week as we'll see probably a pretty bullish week in the market. Russell 2000 up around 1124 and showing us exactly how high these things can go. That's our leader for the year, up that 30+% for the year, and leading all markets up. Didn't have a big breakout on Friday, but certainly on Wednesday got that reversal as we went down to the 30-day moving average on the Russell 2000. Russell 2000 ready to break into blue sky territory again. What do we expect the VIX to do to this? Well, we expect option prices to be a little bit lower, not have as much volatility in it, and that's exactly what we got. Sitting down there around that 12 level. We've been there since right around October 15th as the market has been stable and basically headed up. Not a time of great volatility in the market. For those of you that are traders, this is a good time for you to take advantage of your options technique to figure out how to take money out of a market like this with low volatility. And if you need help with that, remember, Options University is there for your trading skills needs. All right, looking at the bond market, we see nothing being shown to us. We did roll over this week, had a little pop-up on Thursday, turnaround on Thursday, and pop-up on Friday, but still trading within a very tight range on our bonds. TLT being our ETF that we look at as an indicator, 20-year Treasury bond. And looking at gold, that safe haven, well, obviously nobody's very fearful of the market at this particular point. We saw what the VIX looked like, and there we are. Gold down 20% for the year, right in that range, as we see gold not showing any great rush to it by those that have fear. Looking at the SPY, what kind of volume did we have as we popped up into an all-time high? Well, you see the volume actually was decreasing, so not showing us a great deal of volume and therefore strength in this pop-up, but it just keeps chugging along, working its way up the hill, as we see the overall markets responding with the Fed. Finally, let's take a look at the financials. What did we expect them to do? Well, they did exactly what we expected. Remember, we had good relative strength here, not much of a pullback with the market as the market was pulling back, and sure enough, the minute the market popped up, what did this do? Popped up and went into new highs in blue sky. As XLF, our Spider Select Sector Fund ETF, gives us an indication of what the overall financial markets would do. Interested in trading the financials and the banks without having individual exposure on any one individual bank? ETFs provide us that opportunity. So one of those things that you might do to diversify your portfolio and still limit the number of trades that you need to make. You want to own 10 bank stocks, or do you want to own a whole batch of them through exchange-traded funds? Remember, these exchange-traded funds, many of them are optionable, providing for you an opportunity to be diversified and utilize your option strengths to pull money out of the market. Looking at USO, the oil fund, what happened this week? Well, can we say little or nothing? Not showing us any strength whatsoever. USO down there around 14. So with that thought, those of you that are gold members, stick around. We'll take a look at some of our stocks to watch. Apple, McDonald's, see what happened as we popped into blue sky. Which of these stocks were our leaders? Which showed good relative strength? And did they pop into new highs as we talked about last week? Well, that's what we're going to see. For those of you that are not gold members, stick around. Or if you'd like to see more free videos from WW Options University, go to www.optionsuniversity.com/freegold.com. More free videos are available for there. That URL will be at the end of this video. With that thought, it is Thanksgiving week. We got a trade shortened week this week, and this is Butch Shorak. It's Monday, November 25th, 2013. This is Market Forecast, and we would like to thank you very much for being here, and remember to thank whoever it is and whatever power it is that makes your life so desirable. Have a happy Thanksgiving.